In Chapter 1, we'll be looking at three different handouts. We have the Chapter 1 lecture notes, Chapter 1 fund types, and Chapter 1 financial reporting under GASB 34. Let's begin with the Chapter 1 lecture notes. In this chapter, we're going to be talking about not-for-profit organizations. Specifically, we're going to be talking about state and local governments. Additionally, we'll be talking about the different fund types that are used for state and local governments. Finally, we'll discuss how the different funds fit together for state and local governmental accounting. The first thing I want to note here is how government and not-for-profit organizations are different from for-profit organizations. Many of you have already taken financial accounting, and in financial accounting, you focus on for-profit entities. So an example of a for-profit entity would be Microsoft or Apple. Now, the organizational purpose when it comes to a government or not-for-profit organization is different than a for-profit organization. So we can say that not-for-profits and governments serve a specific purpose. So governmental entities serve the public. They provide basic services such as fire, police, or trash services. Not-for-profit organizations, for example, Guiding Eyes for the Blind, provide services to people that are blind and need a seeing eye dog, for example. Also, government and not-for-profit organizations are different than for-profit organizations because if you think about governmental organizations, they raise their money through taxes. This is a unique ability for a governmental organization. Governments are the only organizations that have the right to assess taxes on people. Not-for-profit organizations raise their money through, typically, donations. So donations are voluntary in nature, and people who believe in a not-for-profit organization's mission may donate money to that not-for-profit organization. Also, it's important to note that not-for-profit organizations raise their money through membership dues. Additionally, in terms of the role of longevity, governmental organizations have an unlimited life, and they typically cannot go bankrupt. In terms of relationship with stakeholders, we can see that governments and not-for-profit organizations have a relationship with stakeholders where they serve their stakeholders. So, for example, the government is supposed to serve the citizens that live in a certain area or jurisdiction. Not-for-profit organizations are supposed to serve stakeholders such as the Red Cross. They provide services to people in the community in need of health services. Finally, let's talk about the role of budgeting. So the way a budget works is that you have a budget, then you have your actual results, and then you have a variance. So for example, I might budget $100, and actually I only spent $90. So my variance is $10, and I came in under budget, so we call that favorable. Now, I want to point out that budgeting can be used for one of two purposes. So budgeting can be used for control or planning. So budgeting for control means that you use a budget to try and persuade an organization to save money. So think about budgeting for control as like being on a diet. Look at the budget here. If I say my budget is going to be $80, don't go over 80. Maybe this is a very low cost budget. If the actual cost is 90, then you can see that we went over budget by $10, so that's unfavorable. But this would be an example of budgeting for control purposes. Another form of budgeting is budgeting for planning purposes. Planning means making sure you have enough. So let's say that I'm going to create a budget for $120. I want to make sure that we don't run out of money. Let's say the actual results were $90. So in this case, we have a $30 favorable variance. But you can see here that for the budget that I created, I wanted to make sure that we have enough, that we don't run out of money. So this is budgeting for planning purposes. So think about control as like being on a diet. You're trying to create a restrictive budget. Think about planning as like having a big party where you don't want to run out of food or drink. So here the budget is a lot bigger. The actual results are whatever they are, and then you can compute the variance. Okay, so very important, just make sure that you know that budgeting can be used for planning purposes, also for control purposes. Okay, so how would we define a governmental and not-for-profit organization based on what we just talked about in part 1? We can say that government and not-for-profit organizations serve others, and they provide services that are going to be engaged in so that you can achieve a certain mission. Here at the bottom, you can see that we have a chart. This is problem number 1. This is on page 3 of the handout. So we'll fill this out in just a couple minutes, but think about the differences between for-profit and not-for-profit organizations. Okay, next, let's talk about standard setting authority. This means who makes the rules. So when it comes to federal accounting, FASAB makes the rules. This is federal accounting. What about state and local accounting? State and local accounting, the rules are established by GASB. GASB stands for Governmental Accounting Standards Board. You can see here, state and local. Who makes the rules for other not-for-profit organizations? That would be FASB, Federal Accounting Standards Board. Okay, so let's think about some examples here. FASB, or FASAB would make the rules for the U.S. government, and when the U.S. government does their accounting, they would have to comply with FASAB. GASB would be used to create rules that, for example, the state of Maryland would have to comply with. Also, what about the city of Rockville? That would be also under GASB. FASB would be, for example, the Red Cross, Habitat for Humanity, what are some other examples of non-for-profit organizations? Doctors Without Borders, okay, and so on and so forth. Okay, next, what you should know is that when we create rules for GASB, or FASB, statements and interpretations, this is the highest standard of rules that you can have. So for example, if you see a statement and interpretation, then you know that that is the most authoritative standard. An implementation guide is the lowest level of standard. So for example, if you see statement and interpretation and you see a practice bulletin, which one is more important? They're both important, but if you see statement and interpretation and a practice bulletin, which one is going to provide the more authoritative standard that you should follow? Obviously, statement and interpretation would be more important. Okay, next we're going to talk about the most important concepts for governmental accounting and federal accounting. The two concepts that you should know are accountability, interperiod equity, and fund accounting. So accountability, and I'll read the definition here. This is from GASB statement number 1. Accountability is the cornerstone of all financial reporting in government. Accountability requires governments to answer to the citizenry to justify the raising of public sources and the purposes for which they are used. This means that accountability is this notion that you have to provide transparency, you have to make sure that you're serving the public. Accountability really ties in with this notion of budgeting. Because remember, budgets are used for planning and control. When you look at accounting for state and local governments, when you look at accounting for the federal government, you'll see a lot of budgeting. You'll see a lot of budgets that are used. You'll see a lot of tables where they have the budgeted cost and the actual cost. So budgeting is also used for-profit entities, but budgeting is extremely, extremely important for state and local accounting and also for the federal government. Also, interperiod equity. Interperiod equity is the concept where you're asking yourself the question, are your current expenses being paid using current resources? If the answer is yes, then it means that you have interperiod equity. Okay, so another way to think about interperiod equity is to ask the question, my current benefits, is it being used by the current resources that you have? Let me give you an example. When I was in college, we had a student athletic fee. And we had to pay a student athletic fee because the university that I went to was trying to build a new gym. The problem was that the gym wouldn't be ready until 5 years later after I already graduated. So is this interperiod equity? Yes or no? Building a new gym, which will be used in 5 years, and students today have to pay for it. Would you say this is interperiod equity or no? I would say no. The reason why no is because who is benefiting from the gym? Students 5 years from now. But who has to pay for the gym? Students now. So the people who benefit are not the same people that have to pay for something. This is not interperiod equity, so no. If you look at the notes, you can see that we have a problem here. Look at problem number 2, and in problem number 2, it's asking you a series of questions. Is there interperiod equity, yes or no? Okay, so go ahead and take a look at this yourself, and then I have the answers typed in. Let's go over the most commonly missed ones. It says, assuming 30-year serial bonds. Serial means it's paid in series every single year. So you issue a 30-year serial bond to finance the construction of capital assets with an estimated life of 30 years. Okay, so if you have a capital asset like a bridge or a new building, how many years are you going to have the benefit of that building or capital asset? It says 30 years. How many years do you have to pay for this capital asset? 30 years. So it looks like the benefit and the cost are matching up together. So we say there is interperiod equity. So go ahead and take a look at that question yourself. I provided the answers for you. Next, let's talk about funds. Okay, so we have different types of funds. So what this means is that we're going to be providing more detail. So more detail. When it comes to for-profit accounting, we only have one set of books. With our books, we create an income statement, balance sheet, cash flow statement, among different things. Now, for state and local governmental accounting, we're going to create a separate set of self-balancing books. Okay, that's what a fund is. Okay, so fund is a separate set of self-balancing books. We're basically creating more detail. So we have 3 types of funds. We have governmental funds, proprietary funds, and fiduciary funds. If you take a look at the notes, you can see problem 3. Here is a list of all of the different funds in one place. Okay, so here you can see that there are 11 funds. So if you count the different boxes here, so you have 1, 2, 3, 4, 5, 6, 7. There's 11 different funds. Okay, so first, what is a fund? It's a separate set of books So we have 5 types of general funds, governmental funds. General fund, special revenue fund, debt service, capital projects, permanent. We have 2 types of proprietary funds, internal service and enterprise. Finally, we have 4 types of fiduciary funds, private purpose trust, investment trust, pension, and agency. Now, governmental funds basically means like core services. Okay, so for example, if we have a fire department, that's like a core service that the government provides. So the fire department would need to create their own set of accounting journal entries. They'd have to create their own set of financial statements. So the fire department is what kind of fund? It would be general fund. Proprietary funds are like business types of transactions. For example, let's say that the state of Maryland operates a bridge where you have to pay a toll. Okay? So they make money when people pay the toll and go over the bridge. The bridge would have to create their own set of financial statements. And what type of fund is a bridge or toll? That would be a enterprise fund. Fiduciary funds are where you keep track of other people's money that doesn't belong to you. So for example, if you have a pension for your employees, that's not your money, that's not the government's money, it belongs to the people. So which fund would a pension be accounted for? In the pension fund. In this handout, Fund Types, I have a summary of what each different fund means. Okay, so you can take a look at this on your own. And also your book has an extremely good explanation for the different types of funds. Okay, the last thing we're going to go over in Chapter 1 is we're going to talk about the basis of accounting. Okay, so there's two types of accounting that you can use when it comes to state and local governments. There's the accrual basis of accounting, and there's the modified accrual basis of accounting. What you should know is that the accrual basis of accounting is what you've already learned before in financial accounting. Accrual basis means you have short-term and long-term assets and liabilities. We call accrual basis of accounting the economic resources approach. What about a modified accrual? Modified accrual only has short-term assets and short-term liabilities. We call this modified accrual. Modified accrual focuses on current financial resources. All right, so we can take a look at this last handout here, financial reporting under GASB 34. We can see that everybody uses the accrual basis of accounting except for governmental funds. So governmental funds use the modified accrual basis of accounting. Okay, that means that when you do the accounting and financial statements for governmental funds, they're going to focus only on the short term, the current financial resources. Everybody else uses the full accrual basis of accounting. Here we have something called government-wide. Okay, so government-wide means that if you take these three financial statements, governmental fund, proprietary, and fiduciary, if you combine them together, it's called the government-wide financial statements. Let's take a look. In this chart here, you can see that we have the financial statements for governmental activities. Remember, you use the modified accrual. You have financial statements for proprietary funds and financial statements for fiduciary funds. Now, when you take these three and combine them together, put them together in one financial statement, it's called the government-wide. Now, there's a bunch of stuff here in the middle. And what this is saying is that governmental funds are modified accrual, so you have to convert them to full accrual and then they go into the government-wide. Proprietary funds, you have internal and enterprise. They basically go into the government-wide financial statements. Okay? And then there's no line here for fiduciary. Now, the reason is because fiduciary funds are other people's money. So if you're accounting for other people's money, then you shouldn't include them in your consolidation, your government-wide set of financial statements. In this chart here, just know that you can have an annual report for a state and local government. And a state and local government can have basic financial statements. Okay, so you can see the basic financial statements here. Basic financial statements include government-wide financial statements, major fund and component unit financial statements. Component unit just means like other stuff. And then you have your notes. What is the minimum external financial reporting that you have to do? You have to have your basic plus your management discussion and analysis. That's kind of like a written explanation for what's going on, and other supplementary information. If you want to go above and beyond that, you can create what's called a comprehensive annual financial report. It's called a CAFR, and that includes other information. Okay, so you can see here the abbreviations for that. Okay. Now, we know that we have 4 sets of financial statements. We have fiduciary funds, which have financial statements, proprietary funds, governmental funds, and government-wide funds. You can see that each set of funds have financial statements, which are listed here. In the next chapter, we'll talk about what these financial statements are and what they mean.